Welcome back, YouTube family, and we are here today to talk about the Navy Federal Credit Union secured loan hack. So if you guys have not heard about this yet, this is a update video on this particular loan hack, how you guys can take advantage of the system with building your credit using Navy Federal Credit Union secured loans. This will work with certain other credit unions and banks. If you are not able to get into Navy Federal, you just have to ask them if they allow prepayment, and also when your funds are released, if it's after payments or at the end of the loan term. So generally, secured loans release the funds at the complete end of the loan term. So if you get a secured loan for a year, you don't get your funds back until the end of that year in most situations. So you want to make sure that they're going to release your funds before that, as well as making sure that your financial institution is going to allow you to prepay and push your payment due dates back based upon you paying early. If they do both of these things, then you can use this technique. If not, you may be able to do something similar, but not necessarily the exact same thing. But let's go ahead and get right into the video. So what you have to do is you have to call in or go into a branch to get the secured loan. They're currently not doing the secured loan applications over the phone. Basically, you just have to have enough money in your account to secure the loan for however much you want. These secured loans start at $250 and go up to, I believe, $50,000. So there's so many different term ranges, and the term ranges are depending on how much money you put down. What I did find out is the term tiers currently $250 to $500 is getting you 6 months. $501 to $1,000 is getting you 12 months. $1,001 to, I believe, $2,000 is getting you 18 months. But the good thing that I found out is it does not have to be a even number. So you can literally put up a secured loan for $1,001 just to get that 18-month term, instead of just putting up $1,000 and saying, oh, I don't have another $50 or $100 to make it an even, number. No, Navy Federal is allowing you to put that number at whatever number you have and can afford to put on there. So if you want to put $1,001 to get the extra 6 months, you can definitely go for that. I'm really glad to hear that. So here's how this process works. You're going to first hit the like button for the YouTube algorithm. Then you're going to get the secured loan. Once you get the secured loan, you're going to pay the majority of this loan off. So, if you get a secured loan for, say, $1,000, you want to pay off, between 700 and 900, 70 to 90% of that loan off right away, immediately. Boom. So now what happens is, by you paying that loan off so quickly, it lowers your debt to income ratio. So now it's not reporting that you still owe out $1,000. It's only reporting that you owe, $100 to $300 at that point, dropping down your debt to income ratio significantly. So this is going to allow you to keep your debt to income ratio low. So what happens, and this is why I said you want to make sure that your bank is not paying out as to term, but paying out quicker, because Navy Federal deposits those funds back into your account within 72 hours. So once you sign up for the secured loan, they take the money out of your account, it goes back into your account, boom, within seconds. Now you pay off the majority of this loan. Within 3 days, you get back however much you paid off on this loan. So if you pay off $700, you have $300 in there, Monday, Tuesday. Now Wednesday comes around, you're back up at $1,000 balance. So now the next step to this is to repeat if necessary. If you have really poor payment history, your payment history is under 98%, then you may want to get 2 of these secured loans to build up some more positive payment history. And you may want to try to run this same technique twice within a short span of time. Generally, if your payment history isn't very poor, you're just doing this to build a relationship with a certain financial institution, you won't need to repeat. But if you're in a rough enough credit situation, you may need to repeat this. If you don't need to repeat this, great, because the only thing you have left to do is make small monthly payments every month just to keep the loan active and actively paying it. And once you reach the end of the term, this loan will have lived out its complete term. The due dates would have been pushed back every time that you paid it, as well as when you sent in this original payment. And you can ride that whole term out of whatever term you choose, as long as you split those payments up over that amount of months, as well as you're only paying 2% off on however much of this money you choose to leave on there. So say you get $1,000 loan, 2% of that would be $20. However, if you pay off 90% of that loan and you pay it down to $100, 2% of $100 is $2. Who can't spare $2 to get a positive reporting trade line with no hard inquiry on their report that's going to bring this type of value to you? So with that being said, thank you all for watching. Thank you all for commenting. Thank you all for subscribing. And we will see you guys in the next video.